Welcome to Sector Watch. This week we are focused on buybacks, the fastest growing way crypto projects are returning value to holders. It is using real revenue or treasury assets. I'll explain this in plain English, show winners, and give you a compact checklist to spot durable programs versus marketing stunts. Let's break it down. What is a buyback in layman's term? Think of buyback like a company repurchasing shares, but on the blockchain. When a protocol makes money, say trading fees, launchpad revenue, stablecoin interest, taking revenue, it can use some of that cash to buy its own token back from the open market. What does that do? That reduces supply and can provide price support. And crucially, it signals the team is returning value to token holders rather than stuffing the team's own pockets. So the simple analogy, so revenue gets to open market purchases, which leads to fewer tokens circulating, which leads to holders potentially benefiting from the price going up. Why does it matter? Buybacks matter because crypto has trust problems. Many tokens are inflationary or suffer unlock terms. A transparent buyback program is a provable sign that the protocol is monetizing and choosing to share that revenue. But, and this is big, buybacks can be done badly. It depends on timing, execution, if they're draining their growth capital. So we want programs that are real, repeatable, transparent, and well executed and doing buybacks from their revenue. So let's look at some examples to make it easier. Number one, we've seen the famous and the most popular token of this year, which is Hyperliquid. It's a revenue leader and buyer. We've seen revenue, it's been making around $100 to $200 million monthly, and 93% of that goes to buying back their own Hype token. Trackers show that Hyperliquid leading recent repurchases, data by CoinDesk or Dune, that we had the recent largest weekly repurchase chunk that was $24 million worth of Hyperliquid token purchased back in 1 week. If you look at this metrics, we could go back to $1 billion worth of buying back in a year. It depends on obviously the flows and everything, so that's there. And why should we be watching this? So we've got the Hyperliquid as a decentralized perpetual futures exchange, and it generates steady fee revenue, and it is ideal for repeatable buybacks. That's what we want. Continuous revenue which goes into continuous buybacks. Next token we've got is Pump.fun. It is a launchpad, or it's a meme coin launchpad. You could launch your own meme coins, and it's continuously been buying aggressive. They did a token launch recently, and now whatever they're earning, it shows that token terminal or Dune shows very high fee income. One dataset lists Pump.fun at $705 million plus annual revenue. Another says $734 million a year. So Dune CoinDesk tracking shows $59 million cumulative buybacks in one article, and social trackers report ongoing daily buys. We've seen another 2 million buyback yesterday, or on an average, we've seen $1.8 million worth of token being buyback. And so far, it's said that Pump.fun has reportedly bought more than 6% of their circulating supply as per tracking tweets with the buybacks. So why should you be watching Pump? I mean, launchpad fee models produce strong cash flows. Pump.fun has flowing fees back into Pump token. It is high immediate impact, but sustainability depends on ongoing launch volume. This is actually one of the best trades that traders are talking about on Twitter. Hyperliquid did this. It came to a $50 billion fully diluted value, and now Pump.fun is following the same thing, and it's only sitting at a $5 billion. You can see the gap between Hyperliquid and Pump. Although those are two different sectors, if Pump continues, it could almost match to Hyperliquid. It's a very good trade that traders are talking about on Twitter. Next token we've seen is Ethena. So it's got a stablecoin plus fee switch. It has a good buyback potential. Revenue. Ethena appears in revenue's top list, hundreds of millions of annual revenue. Data notes Ethena made $54 million last month and $480 million since launch in other citations. So buybacks compared to Ethena. So we've got a good fundraising happening, a pipe fundraising happening for Ethena, which we've done on a CoinCheck episode this week. Go check out the CoinCheck episode to know more on that. But they've enabled a fee switch that would lead for their stablecoin to buy back almost $500 million worth of token, and they've also raised funds to buy back their own token in a systematic and programmatic manner. So check out CoinCheck for that. Next token we've got is Aave. It's a discretionary DAO-driven pilot. So it's got a pilot of $1 million per week buyback. That's the government plan. Early results show accumulation into ecosystem reserves. Token can be used later for developments of bonds. Why should we be watching this? Aave is a blue chip protocol testing disciplined execution under DAO control. It's got good template for mature tokenomics. Other names that we should be monitoring, we've got Sky, we've got Ether.fi, Radium, Jupiter, D-Bridge, G2, and now even Injective is showing $100 million worth of buyback. All show revenue or fee switch mechanisms. Some allocate a portion of their fees to buybacks, others Others do a treasury reserve. Each has a different buyback model, burn, treasury reserve, or distribution. But what's the paradox? You might be wondering, what is the risk with buybacks? It's very good long term. The project continue buying, keep buying their tokens, but reflexivity timings. So while buybacks are good, there's also the buyback paradox. You should understand the risk for buybacks. See, so there's got reflexivity timings. Fees rise when markets are hot. Buybacks then buy at high prices. When markets are cheap, fees fall, buyback stops. So what essentially this means is, as long as we are in a bull market, projects keep earning revenue and then they keep buying their tokens. But if a bear market comes, the revenue stops and then the token starts going down. The buybacks stop, the buybacks are negligible, and then the token doesn't have a purpose anymore. So you should be looking, that concentrates purchases near the market top, so you should be careful for that. We've seen a capital allocation trade-off. Buybacks are great for holders, but spending all revenue on buybacks can starve research and development, growth and marketing. Good programs balance buybacks plus product investment, but sometimes a very good product does not need marketing as well. So we've seen transparency and governance risk. Undisclosed or one-off buys can be misleading. You want a clear on-chain policy and DAO votes. So what's the alpha? What should you be watching? What's an on-chain checklist? So I'll be telling you about REETs or REITs. Number 1, revenue source and size. Is the revenue recurring, fees, interest, or one-off? Depends, like Hyperliquid, Pump.fun, Ethena show recurring fee engines. Number 2, percentage of revenue allocated to buybacks. 90 to 100% is aggressive. Some tweets claim that Hyperliquid and Pump spend almost all their revenue buying back their token, which is good, but ideally it would be conservative between 20 to 50%. Number 3, execution method, taker versus maker versus time smoothing. Maker plus smoothing equals better long-term support. So how are they doing their buybacks essentially? What is the method of buying back their tokens? T is transparency. Are buyback transactions publicly audible? Is there a governance vote? Look for Dune dashboard, treasury transactions, etc. And last but not the least, S, sustainability. Check the protocol's runway, treasury assets, or whether buybacks still have promotional volume. So short mnemonic, REETs reads revenue, equity, execution, transparency, sustainability. So what's the verdict? Buybacks are the clearest on-chain signal of real revenue being returned to token holders. The best programs are profitable protocols with predictable fees, a transparent rule-based buyback plan. Beware programs that look impressive in 1 week but rely on ephemeral volumes. For traders, use buybacks as a factor, not the only factor, and always level with on-chain checks for these. So that's it for today's Sector Watch. Thank you for watching 3.0 TV. Subscribe to our YouTube channel to be updated with the latest news and developments happening in the Web3 space. I'll see you guys again on Friday. Happy weekend and goodbye for now.